Matthews of Bank Julius Baer and Company is joining us now in the studio. Thank you very much, Mark. It's a pleasure having you with us in our studio.
Likewise.
Well, that's the first question, really. You know, we've seen this risk on, more particularly in developed markets. The emerging markets seem to be seeing a little bit of money lately. Do you think it is already factored in all the good news expected from Trump? Are we going to see some wait and watch for a longish bit?
I don't think so, because I think we all realize that he has a fairly unpredictable style. So a lot of the things that he's talking about doing, like cutting the taxes in the U.S. from the most expensive to the second least expensive in the world, $1 trillion in infrastructure spending, repatriating about $1.5 trillion of U.S. companies' profits that have been left overseas, et cetera, deregulation, as you said, of the banking industry. These are all things that I think we've only assigned partial values to because of this unpredictable style that he has of communication. So I think that if he does deliver, the market can still go up. And when I look at what he's done so far, I think he intends to do what he said he would. So as far as what should I say, trade policy, foreign policy, I think the important event to watch will be when he meets Prime Minister Abe of Japan this coming Friday. And I know that Prime Minister Abe is also going to Washington with a message that Japan would like to help create some 700,000 jobs in the U.S. doing massive high-speed train and subway projects in the Northeast and Texas and California. So we shall see, but I remain optimistic that this is a government that will deliver.
Okay, Mark, good morning. What about the fund flow situation? We have seen some inflows back into the emerging markets from foreign funds, not into India yet. Your thoughts on that?
Well, I think the Asian markets are in a bit of a sweet spot right now for three reasons. And the first is that the dollar is relatively subdued. If the dollar goes up a lot, historically, at least for the last 22 years, there's been a pretty strong inverse correlation between the dollar and Asian markets. I can't really explain it perfectly, but that correlation exists. It may not exist forever. You know, it didn't exist before 1995. I remember when Asian markets went up and the dollar went up at the same time. So we could go back to that. But at least for now, markets are comfortable that the dollar is not exploding higher. Economic data and earnings data generally in Asia, in emerging markets, has been good. So, for example, the Russian PMI is growing very strongly again. The Chinese earnings have been good. Indian earnings have been fairly decent. And then I think the third and final thing is that people just have a fear of missing out. They know something's going on. Most people have not really participated in equity markets in the last 3 to 5 years. They sense that we are at a big inflection point where governments in the developed world are moving from a more austerity and socialism to something more capitalist. And they don't want to miss that.
Okay, Mark, good morning. First of all, thank you for being here with us in the studio. You've been a long-time observer of India and you've liked the Indian markets as well. But we haven't seen any kind of foreign participation all of last year. It's only domestic institutional investors that have really, supported the market. Do you see FII's return this year?
So, thank you very much. I think, I've always adopted an approach on India, which is a long-term buy and hold approach, simply because I can't time the ins and outs of this market. I can't time the ins and outs of any market. And I don't think a good way to invest is by doing that. You know, if you had $1 million and you put it in the S&P index back in 1970, that would be worth $25 million today, had you reinvested all the dividends. So I take a similar approach to India. But what I would say is that clearly there has been disappointment on the part of foreign investors, because to go to a market that's very far away from you, it needs to be appealing, and usually when we talk about appealing, we talk about growth, if we're talking about places that are very far away. So, I mean, why would you, as an American, go and invest in India, which has, extremely low, zero or very small positive earnings growth, when you're getting 8 to 10% earnings growth at home? And I think that explains why they haven't been in this market for the last 12 months.
But do you think that would continue?
Well, it very much depends on India. So, the earnings need to start picking up for people to come back in a big way. I would say that there is a perception that among the large emerging markets, India is the least vulnerable to a more protectionist policy on the part of the United States, simply because exports are not a big component of this economy, particularly exports to the United States. So there's a sense that if you want to invest in emerging markets, this one's a bit of a safe haven. But for the really big serious money to come back, I think you would need to see more green shoots. We just haven't seen enough of those yet.
Now, I'll come back to ask you about what exactly are your earnings expectation levels in India. But before that, what happened late in 2016 was a short EM, long DM trade. Can it be a long DM, long EM trade, basically long equities, short bond trade that will play out? What will be the big theme of the first 6 months of this year?
Well, absolutely it can, but the reason why it was that short EM, long DM trade in the fourth quarter of last year was the dollar was very strong. I think the dollar went up almost 10%. So that goes back to my earlier comment that for some reason emerging markets don't like a strong dollar. If we're in an environment now of a benign dollar, which I hope and think we are, sort of about 95 to 100 on the dollar index, then you can get long EM and long DM. Yes, you can.
And what would you like in India?
I wish I could answer that question. I don't have the granularity to say. I think much depends actually on the results of the UP election on March the 15th, because if the government, BJP, doesn't do well there, we might see a lot more populism, freebies, particularly in the rural areas. Which I think would, on net not be a positive thing, but that would reorient you more toward the rural sector, at least before the 2019 election.
Just to get back to the Trump question, because that will have impact on a couple of sectors for us. The Indian IT and pharma. How would you look at them?
And, I think we're all waiting to see what he's actually going to do. I always like to try to be an optimist, but I must say that he's actually checking the boxes. He's doing all the things he said he would, and he's definitely said in the past that he wants jobs to come back to the United States. And I don't think he's just talking about manufacturing. He's talking about services as well. So I think it is a legitimate concern, yes.
All right, we'll have to leave it at that.